Everyone. I hope everybody can hear me loud and clear. Yeah, we'll start in 1 minute, max to max, and we will keep it little short, right? We will try to wrap this thing in 15 to 20 minutes, and this is strictly for traders. So if you are a trader, then you can be here, and if you are an investor, you can leave, right? You may not find it useful. Only for just for few days we are we'll talk about the market outlook and everything. It will be valid for 2-3 days. Yeah, thank you. So investor can leave, traders can be here, right? And we'll start in another 30 seconds. So good evening, everyone. Thank you for joining us in such a large number. So I want to thank you all for keeping faith in us when things were really tough and bad. I think some 2 weeks back at 15,700, I told you clearly that my lead indicators are telling me to buy, and I thumped the table and told you to just buy and hold on to your investments. Nothing will happen to the market. And I have shared that YouTube link of that video. You can go and check it out, right? So all well, and I hope all of you are fine now and in a much better position to manage your portfolio as compared to 2 weeks ago. So I'll explain this entire FII selling and this whole number that this FII sold 3,20,000 crores worth of stocks in Indian stock exchanges and all those stuff in 2 minutes. So please understand, all selling is not intelligent selling, right? So a lot of times you sell because you need money. And when you need money and you have to do forced selling, you cannot equate that selling with intelligent selling, right? Intelligent selling is equal to when you don't need the money, but you are selling it because you are finding that valuation are so expensive, right? So, and one important thing, I'll be not taking any speaker request today because I have a meeting at 9:30. So I'll speak for 15 minutes, and then you can post your query in a comment section, and whenever I find time, and if I have some view on that topic, I'll reply to that. So forced selling done by FIs, and mainly because they lost big amount of money in US markets, mainly small caps, specs, and cryptos and NFT. They lost huge amount of money. There is no comparison at all. You should feel lucky that you are in India and your stock corrected by 25 to 30%. Small caps, right? You should feel absolutely lucky about it, right? And what happens is a lot of FIs, those who invest in India, they raise money from the clients and they invest in India or Taiwan or China or any other country. So why FI sold so brutally? I explained the same 2 weeks ago, but I'm just, because India was only the sellable market at level, because you cannot sell Russia, you cannot sell in USA because your portfolio is already down 50, 60, 70% in some of the small caps, mid caps, right? So India was the only sellable and strongest market in the world. So you paid the price for being strongest. What? You paid the price to being the best class in the best student in the class, right? But what happens when the things get normalized? Again, the best student in the class will get rewarded. So what is the theory for the traders? I'm talking in the context from the absolutely trading mindset. The stronger or the strongest will become more stronger. So we try to buy high relative strength stocks. So in a global market context, as of now, as I speak, India is one of the best performing market in the world in 1 to 3 years time frame. So whenever the FI will find some kind of a comfort when the global cues are fine and everything is fine, India will be the first market to recover. And you are exactly, seeing in front of your eyes everything going as per our predictions. And we have to thank you, Safir ji and Kedia ji also. They shared the same view that the market is looking good in our last few Twitter spaces, and their call on mid-cap IT and all those stuff, they got it right. So you guys should thank you them as well, right? Because they take out time and speak for you guys. So whenever you find time, you can say, whatever the compliment you want to give to them, because if you give compliment, they will share their thoughts more frequently and they will feel motivated. Nothing else, right? So please understand, there is no difference of retail public in USA and the retail public of India. Retail always behave in an almost similar fashion, right? They get panic when things are against them, right? And US public literally panicked, right? And they put the withdrawal in XYZ, any fund which they opted for their investments. And because of that, FIS has to sell. Sold all the emerging markets, and all the emerging markets so brutally, right? So this concept is well explained. So always see that the selling which is coming from the FII side is a forced selling or natural selling. And I have mentioned this point 100 times on Twitter, right? Please understand, FIs are the master of reverse arbitrage. They have discovered this mechanism of trading the Indian stock market. So what they do, they sell in cash, and by selling in the cash, they discount their own stock and they buy those stocks in stock future segments, right? And they go massively long. So I'll give you the FI data right here. So just imagine, retail is having the lowest index future position in last 50 days. I'm repeating it slowly. Listen to me carefully. Retail is having the lowest index future position in last 45 to 50 days. Retail is having the lowest stock future position in last 45 to 50 days. On the contrary, FIs are having the highest stock future position in last 50 days. As we speak, FIs having, if I am not wrong, FI is having some 3,25,000 stock future long position, which is massive, right? This is the highest, in last 50 days. Now, FIs are net long in index futures, right? So now I am giving you the context. So on a very good day like today, this bullish data is having no meaning. Now everybody is watching this data. FIs are big time bullish, retail is not bullish. You may see some kind of a consolidation in the market. When I was telling you this data 15 days back at 15,800, then this data was useful. Now this data is no longer useful for you as a trader. Now you have to watch for fresh cues like macro indicators, crude, a dollar index, or maybe your war situation, right? So now you have to watch for something else, because this data is already priced in 1,000 points rally. This data was having serious relevance at 15,800. This data is having no relevance at 16,700, 16,800. So the plain data reader without any context may go long tomorrow in Nifty and lose money. And then he will come and blame you, sir, I lost money, right? So please understand, sir is telling you to buy the Nifty from 15,800. And you are buying Nifty at 16,800. And that 2,000 point rally in the matter of 4 or 5 days, right? So you have to understand data and context. Still, data is very bullish, but you have already rallied 1,000 points from the bottom, and in 4 or 5 days 800 points, right? So this bullish data is no longer relevant for 2-3 days time frame traders. I hope I'm making a lot of sense to you. This is how I do the context analysis and data analysis. So the data is with you, but context is against you, right? because the market is already priced in lot of positivity, right? And now a lot of post-mortem analysts will go long in Nifty and may lose 100 200 points. So this is the one point I want to drive home. Then as a trader, you have to watch for certain events, which is going to be very, very critical in next 10-15 days. And one data which will come tomorrow, Q4 in India's GDP, right, which will be around 3.5 to 4%. So, but don't get panicked with that data, because your aggregate GDP will be still somewhere around 7.5 to 7.9, which is not bad, which is one of the fastest in the world. Q4 GDP will look lower because of the higher base effect plus Omicron and other supply chain issues, right? Then we have a RBI meeting, MPC meeting from 6th June to 8th June, right? Which is very, very important. And I'm hoping on 8th June, we will see 40 bips hike in rates. Then we have a very, very, this data will be a game changer data. You will be having US CPI inflation on 10th June 2022. My expectation is 7.4. Any CPI number below 7.4 will be a game changer number for world stock market. Then we have a Q1 advanced tax deposit last date, which is on 15th June 2022. Very, very important. Why? For you as a trader, why this date is so important of 15th June? Because a lot of company will come with their advanced deposit numbers, right? And advanced tax deposit number. If that number is high, then you can, make a sense that this company is going to report a good number in a difficult situation, in a difficult environment. So you can short list that stock, and if you're, whatever the trading setup you are using, you can use that trading setup, and you can take that trade on that company. And then another game changer event, which is Fed meet. So 14-15 June 2022, and I'm expecting on 15th June night. So the reaction on Indian market will come on 16th June 2022. 50 basis point rate hike. This is one of the biggest event you can have in 2022. Why I'm telling you this? Because this commentary will decide the market. Nifty, Dow will go to 40,000 or Dow will remain at 32,000. This policy, this Fed meet or FOMC minutes of the meeting of this June policy will decide Dow will remain at 33,000 or Dow will go to 40,000. I'm telling you with all the certainty, right? So either you will go sideways or either you will go big breakouts. So watch out for these four, 5 key events, and these all events are going to be game changer, right? So you should hedge a lot. If you are a trader, you should hedge a lot, and you should have a proper stop loss, right? So this is, keep a stop loss. If you are taking a leverage bets in FNO, don't trade without a stop loss. And then few very, very essential things which any trader has to follow. And the rule number 1 is, from tomorrow onwards you have to maintain your leisure. So whatever the trade you are taking, please try to record that trade. Otherwise it will be very difficult to improve your trading. So rule number 1, start recording all the trades, right? Whether it is in option, future, and what is the logic behind that trade, and be accountable toward your losses. I know most of you are working professionals, must be earning some 10-15 lakh rupees salary in a month, some of you, right? But please understand, this money belongs to your family. You can't lose it in the market. So be accountable towards that. Start behaving like institutions. Whenever you are losing money, try to review your process. Then if you are trading, and if you are trading in cash segments, your stop loss should, and you are trading for 10-15 days, your stop loss should be not greater than 8%. So if I am buying a stock at 100 rupees and I am trading for 20 days, means 1 month, roughly thereabouts, my stop loss should be 92. It cannot exceed 92, right? Or either ATR, 1.3x of ATR value, whichever is lower, you can opt for that. Then try to trade in the company where the fundamentals are reasonable, because we know that charts are slaves to earnings. If you don't find the earnings, it will be impossible to make money for you, right? So any company which is having a PE of less than 35, PEG ratio less than 2.5, ROC return on capital employed greater than 13-14%, low debt, right? Absolutely welcome. And please understand, what is distribution? A lot of people get confused with this word distribution, that this stock is distributed among the public. Please understand, any company where the strong hands are holding more than 85% of the stocks, in that stocks you cannot say that the distribution has happened, because 10-15% stake with the retail is not the actual distribution, right? So you will find with a lot of chemical names where you will find the retail holding has gone up to 40, 45, 50%. That is the actual distribution. So these shares may not come up for next 3-4 years because the distribution has happened. But in IT companies, what I am finding interesting is still promoter plus DIS plus FIs are holding more than 85-90% of the stake. So there is a lot of misconception around IT stocks that the distribution has happened. No, my friend, if the big guys are holding still 90% of the company, they will take 2 days to reclaim 2-3 months high on the stock. And you must have seen what has happened with KPIT and all my IT stocks. They went up they went up like crazy, right? 10-12% in a day, right? So another 10% and you'll find that the stock is trading at 3, 4, 5, 6 months high, right? So distribution or any other stock like Infosys and all those which we bought in this recent correction. So I'm telling you, I can clearly see there is two sectors. One is banking and second is IT, where there is no large distribution. So you can trade in that sector and you'll get perfect setup to trade, right? And try to trade the bases which at least you need some kind of consolidation, right, for 2-3 weeks, and then if the stock is giving you the breakout, then you can trade that stock with a 3-4% kind of a stop loss. So I think this is done for today, right? Because I have to leave for one meeting. I have one Zoom meeting at 9:30. So I wish all of you all the best. Do well in life. And don't be over bullish at 16,800. Be optimistic, buy the dip, but don't chase the breakouts beyond a point. And if you are chasing a breakout, keep strict stop loss. All the best to all of you.